There are 5 habits that you may not know about which are destroying your trading. In this video, we reveal them all to help you quickly make trading progress. I'm Mike Bellafiore, and we're a long-standing proprietary trading firm located in New York City since 2005 and now Miami as well, and proud to develop numerous consistently profitable traders. Watch, take notes, and learn from our prop firm so you can grow your trading account.
Hi, I'm Seth Freudberg. I'm the head trader of SMB Capital's options trading desk here in Manhattan. And even though I've worked with hundreds of options traders over the years, there was a time, of course, when I was just getting started out as a trader. And I remember those days very clearly. And believe me, some of those days were very painful. I'd lurch from one strategy to another, never really finding any strategy that was sustainably profitable. And when I was being really honest with myself, I realized that I wasn't getting anywhere at all. There was a point where I actually thought about quitting trading, but I somehow persevered. And it continued that way, honestly, for a few years until I finally figured out what was wrong. And what was wrong was that I was making the same mistakes over and over again. And just like they say, the definition of insanity is doing the same things over and over again and expecting a different result. And so once I identified these mistakes and came up with concrete solutions to them, once I did that, then I was able to finally attain consistent profitability as an options trader. And so if you're feeling frustrated, inconsistent, unprofitable, and discouraged, this is going to be a really important video to watch if you truly want to become a full-time professional trader, particularly a full-time options trader. So stick around if you really want to make it in this business. Okay, so let's start out with probably the most common mistake that traders make when they first get started, and it goes something like this. They start learning option strategies, and some of them are incredibly exciting because certain options trades, like extremely wide iron condors, have incredibly high probabilities of winning. Believe it or not, these strategies can have win rates of 90% or even higher. And if people are sharing how to trade them in an options trading community or on a webinar or something, they can honestly declare that they've been experiencing incredible winning streaks, like 10 or more straight months of trading profits without a single losing month. And that can sound awesome and life-changing, but what you may not realize when you see a demonstration like this, and it's possible, by the way, that the presenter himself may not realize this, the problem is that if you trade a strategy 10 times in a row and have 10 wins, that may feel really great, but there is simply nowhere near enough data for you to reach the conclusion that that trading strategy is going to result in you actually making money long term. And so the first mistake that's going to hold you back from becoming a consistently profitable trader is to jump into trading a strategy without studying its long-term profitability at all. Statisticians will tell you that unless you've traded or at least tested a strategy for 32 instances at least, then you haven't tested or traded it enough to establish the statistical significance of its results. And so you actually have no idea whether a trade is profitable or not, just because that strategy is currently in the middle of a 10-trade winning streak, like this example. Because the remaining 2 months of this hypothetical year could look like this, a year where you actually won 91.6% of your trades, in other words, 11 out of 12, but managed to lose money only once. But that loss was so disproportionate that it wiped out all of the previous profits and then some. And so how can you avoid jumping into a strategy that seems so exciting and consistent and profitable only to find out that it actually doesn't make any money at all and in fact loses money? Well, the first thing you need to do is to subscribe to some legitimate options backtesting software. There are a number of quality options backtesting software products out there to choose from. And once you learn the software, you'll need to test at least 32 instances of the strategy in history to even begin to establish statistical significance of your results. Otherwise, you might be just chasing a winning streak like the example that we just showed you. And make sure to backtest in multiple kinds of markets. Some strategies do great in bearish markets and horribly in bullish markets and vice versa. If you just test the results in a bearish market for a strategy that does extremely well in bearish markets, well, I think you get it. You're going to get a very misleading result, and that can get expensive, believe me. Also, and this is really important, you should trade your strategy with a very small amount of capital after you establish its long-term viability through backtesting. And the reason for that is that there are often real-world execution problems that you're going to pick up on in a real live trading, but not in a backtest. Only through live trading can you truly conclude that strategy is as sustainably profitable as your backtest would indicate. So don't trade your backtested strategy with any size at all, really, just very small until you've traded it live with a small amount of capital at risk. Unless you go through each of these steps, I'm afraid that you haven't really proven that your strategy can be traded profitably for a sustainable period of time. You can't truly establish that this strategy is one of the core strategies that can form the basis of a solid trading career. Let's say that you're following our advice, you've established the long-term profitability of an option strategy in a methodical way. Are you out of the woods yet? And the answer is not quite yet. And that's because basically every beginning trader I've ever met has then made the second major mistake, which absolutely must be avoided, or you literally have no shot at becoming consistently profitable. And that is that you don't trade the way that you backtested. Now, when you think about it, this may seem unbelievable that we even have to say this to you, but I want you to think about it. I mean, you spent all this time, as we recommended, backtesting to validate your strategy, and you finally have fine-tuned and honed the strategy to perfection in your testing process. And then you get all excited and start trading it. And then the first time that you get drawn down on the trade, even though your backtest after backtest showed that the strategy will very often get drawn down at first before it turns into a winning trade, and despite your knowing that, when it comes to live trading and real capital at stake, you absolutely panic at the first drawdown. And then you do the worst thing you can do, which is to completely abandon your plan and instead make some move like you pull the trade off or adjust it in some way that wasn't in your plan at all. And it makes you temporarily feel better. But then like magic, virtually every time, the market will reverse, turning that unplanned move you made into a huge negative for the trade, which can often result in you losing a trade you should have won had you only traded the strategy the way that you backtested it. In other words, ask yourself this one simple question. Why the hell bother backtesting the strategy if you're not going to follow the trade plan in your backtests? Why go through all that time and effort to validate a procedure and then abandon that same procedure when you have live money at stake? It makes no sense. But any of you who have traded option strategies in the past know exactly what I'm talking about and how frustrating that is. It's a self-inflicted wound that's completely unnecessary, and so therefore there is one and only one answer to this mistake, and that is to follow the old trading maxim: plan your trade and then trade your plan. Otherwise, you're acting irrationally and emotionally, and you'll never succeed as a trader long-term if you let emotions and fear guide your decisions. So now you've understood that you have to backtest your strategy using a certain plan for trade entry, trade adjustments, and trade exits. And you also understand that if you're going to backtest a strategy and work hard to validate it, the least you can do is follow it. But even if you have taken those two steps, there's a third problem that bedevils many traders, and certainly bedeviled me in the beginning, and that is failing to take your stop every single time. At SMB, ignoring your stop is a cardinal sin. And I hate to tell you, but more than one of our traders have been outright fired for not taking his or her stop. And the reality is that it makes literally no sense not to take your stop. I mean, think about it. There is no strategy that wins 100% of the time. If there was, everybody in the world would quit their jobs and just trade that strategy and turn into billionaires. So I think we've established that it's literally insane to think that a trading strategy exists that never has losses. meaning that you are going to lose sometimes on trades. That's natural and expected and would be freakish if it didn't happen. No partner of any prop firm in the world believes that a trader can have a 100% win rate. But every partner of every prop firm in the world also knows that for a trade to have long-term profitable results, the wins and the losses of that strategy have to be in a reasonable proportion to each other. Every valid and profitable trading strategy that exists has a target profit and a stop, a maximum loss. But no strategy will ever remain sustainably profitable if traders fail to take their stops, because the predetermined stops are calibrated with the size of the wins, so that if you let your losses get larger than planned, it throws the whole math of the strategy off. In other words, a successful strategy has a certain number of wins and losses, and the sizes of those wins and losses are crucial to the trade working out. So even though no one likes to take their stop, because no one, if they're being honest with themselves, likes losing a trade, even though it's not something you may enjoy doing, it's absolutely necessary to take your stop. No matter what your emotions are telling you, you've got to take your stop. No matter how sure you are that the trade's going to stop drawing down and you're going to win it, no matter what your inner dialogue may be trying to convince you of, I'm telling you, you'll regret not taking your stop. You have no idea that the market is going to reverse in time for your loss to go from normal to catastrophic. So you cannot take that chance. In my trading career, I can say without exaggeration that every single time that I allowed myself to talk myself into staying in a losing trade beyond my stop, every single time my loss got worse. So that's a 100% track record of failure if you don't take your stop. Can I make this any clearer? Failing to take your stop will cause you to have a very short trading career, and that's a shame. The next temptation that you need to avoid is something that we call strategy hopping, and it goes something like this. Suppose that you backtested a strategy like we recommend, and you finally found one that's reliable and profitable and matches your personality. And suppose that you begin trading that strategy consistently. And let's say the trade has a win rate of, say, 75%. But you noticed in your backtest that the 25% of the trades that lose money, you've noticed that losing trades sometimes come in bunches, sometimes 2 or 3 in a row. And so while you're trading it with live capital, and let's say it's a monthly strategy, and you just happen to find yourself, after trading it for a while, in the midst of one of those totally predictable, totally acceptable losing streaks. And in this case, let's say that you've lost 3 trades in a row. And so now that it's not a backtest, but instead it's real capital, and now you've lost 3 times in a row, and then at that point, the worst thing that can happen happens. And that is you attend some webinar or some lecture or something, and the speaker starts bragging about his strategy and how much money he's made trading his strategy, and you get starstruck and think, hey, what am I, some kind of a dummy? That guy's raking it in, and I'm over here in the 3rd month of a losing streak. I've got to be crazy to keep trading this strategy. And worse, you start rationalizing that what's really going on is that your strategy has broken down and that you could be saved by hopping to this new shiny strategy that the speaker was bragging about, and that's how you're going to make some real money. And so you start trading that new strategy before you've even studied it or done any backtest of it. You just figure, hey, that guy's making money doing it, so why not join him? And so without any preparation, without any hard work, like you put into the first strategy, your strategy, without any discipline, in other words, you inexplicably jump into that new strategy. And I can virtually assure you, because this used to happen to me all the time, just as soon as you do that, the new strategy that you were so enamored with will start to draw down. And you look back at the strategy that you had abandoned, and it returns to its usual and expected great results and ends up being very profitable for the year, except you weren't trading it anymore. And I can't tell you how many times I've spoken to traders that have gone down that exact same path and found themselves losing money in a year where either of the 2 strategies would have been profitable. But because they switched mid-year, they picked up the worst streak in both strategies and ended up losing money. It's almost unbelievable that this happens, but I assure you that it happens all the time to people who aren't taking their trading processes and disciplines seriously. And the final bad habit that you'll need to overcome to be a sustainably successful trader is to overtrade because you're bored. Now, I'd like to tell you something. If you want to trade for a living, you need to treat your trading like it's a business. This isn't fun and games. It's a serious practice that can be very lucrative, but not if you trade in an immature, undisciplined way. You did all this work to validate and backtest your strategy, and you found that your strategy includes periods of time where the appropriate action to take is nothing. To let the trade play out. Let it breathe. And the thing is that while you're backtesting, time goes by quickly because backtests are like time-lapse photography. Time is sped up as you move from day to day in the backtest. But real trading is in real time. And mature traders realize that in the real world, periods of time will go by where there's just nothing to do but allow your trade to play out. So I say, if you're bored, go out and get a hobby. Take up stamp collecting or bird watching or knitting or whatever. Anything but messing with your trades. If you mess with your trades and deviate from your plan, you're going to mess the whole thing up. Don't you see? If you want to be a professional trader, you have to remain disciplined and follow your plan. That means if you're bored, too bad. Read a book, do something, but don't mess up your trades. You owe it to yourself and you owe it to your trading firm if you're trading professionally. And so what I'd like you to take away from today's video is that I was just like the rest of you guys. When I first started trading 19 years ago, I made every single mistake that I've pointed out in this video. And I've felt the pain of each and every one of them. And so you got a choice. You can ignore these time-tested principles and then feel the pain for yourself, which is a choice, but not the one that I would take. Or you can take these points seriously, understand the logic and the sense behind them, and then follow them and avoid a lot of the pain that I had to go through. It's up to you, really. But a word to the wise, as they say, is sufficient. So just think about it, make a good decision, and give yourself a chance at being a professional trader.
Now, if you'd like to learn 3 more option strategies that our pro traders use, including the unique options trick that allows you to make money while you wait to buy stocks or ETFs at the price you want, and the options income strategy that allows you to make consistent money whether the market goes up or down or sideways, and how to make money on a stock or index trade even if you're wrong on the direction, then click the link that's appearing right now at the top right-hand corner of your screen. That will open up the free workshop registration page in a new window. So don't worry, you won't lose this video. Or you can register directly for free at optionsclass.com.